Good afternoon and welcome this afternoon to Trading Price Patterns. My name is Ben Watson. I'm an education coach and senior manager here in Charles Schwab. Joined out there in the chat by my good friend James Boyd. He's also an education coach, 20-plus year veteran of the financial markets, and, a pretty good guy out there. He's going to be out there helping answer your questions along the way. I'm glad he's here in this discussion today, and I'm glad all of you are here as well. I started the day earlier this morning talking about index options, and then I've just been running chat for my good friend Brent Moores as we've been talking about managing an option strategy. Now we're going to be talking about trading price patterns, so getting into a little bit more of the nitty-gritty of technical analysis on this really kind of an interesting day. So as we get started here today, thanks to all of you for being here, whether you're live or in the recorded version. We appreciate it. Participate in the chat. Be part of the conversation. We'll talk a little bit about some of the other ways that you can do that along the way here as we get into this discussion. A couple of quick housekeeping items, though, before we get started. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any particular security or strategy. Also, remember that options carry a high level of risk. They're not suitable for all investors. Make sure you're aware of the characteristics and risks of standardized options before considering any option strategy. Now, we're going to use technical analysis as suggested in the name. Technical analysis is not the only way to look at the market. There's fundamental analysis, probability analysis, other ways to look at the market. All of those are theoretical in nature. None of those are guarantees. And so Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Now, we're going to use the Thinkorswim desktop software platform today, specifically the paper money version of that. It's not a guarantee of future performance or success out in the real world. It is a great sandbox and learning environment. However, remember that investing involves risk, including the loss of principal. And we're going to talk potentially about stops in this discussion. I want to talk a little bit about that in this context. Stops allow us to specify an activation price in order to exit a position or to enter a position, but it doesn't guarantee the execution price of that order. And so in the event of a stop market order, there's the possibility that that order could get filled at a substantially different price than you were expecting. In the event of a stop limit order, there's the potential that that order doesn't fill at all. So be aware of that. We'll talk about those risks as we get into some of those specific discussions. One other thing that is a guarantee, however, is that we've got some great educational workshops, live workshops coming up. Tomorrow morning, I'm going to get on an airplane. We're going to fly to Detroit. I'm going to be alongside Ray Kimbrell, Scott Durfee, Kevin Horner, and we're going to be at the Detroit Marriott at the Renaissance Center on Friday and Saturday. We're going to be talking about technical analysis and option strategies. And in fact, in that technical analysis workshop on Friday, these price patterns, the price patterns that we're going to talk about today, those are going to be part of the discussion. So if you are in the area, come and join us. We'll buy you lunch. We'll buy you some breakfast. It's at no cost to you. Join us for that. Then coming up in Denver on the 2nd and 3rd of May, we will be at the Gaylord Rockies, which is a phenomenal property. And look forward to seeing you there. We're also going to be teaching technical analysis and option strategies at that workshop. And then on the 30th and 31st of May, we're going to be in Anaheim, California. It's a beautiful place, Anaheim. I don't know, there's some stuff going on there. There's maybe some visitor attractions there in Anaheim that you might want to, check out. But we're going to be talking about advanced option strategies at that workshop. That will also include some futures content as well as some index option content, that advanced option strategies workshop on the 30th and 31st. So if you're already familiar with trading options, that's going to be a good choice for you as well. So thanks again for joining me today. Let's jump on out to the Thinkorswim desktop software platform and take a look at what's going on in the market today, because things, as always, are changing. The market is a dynamic place and it is moving around. So let's try to put some context to the moves and let's try to take advantage of what we might see happening here in terms of price patterns. Looking here now at the S&P 500. By the way, while we're on this particular page, I'm just going to quickly remind you that you can follow us on X. My X handle is at Ben Watson CS. James Boyd's is at James Boyd CS. All of the other coaches, you're going to find a similar naming convention, so you can find us out there on X. Be a part of that conversation, and also click on that subscribe button down at the bottom of the page. You see that on the bottom right-hand corner. That's going to help to connect you to the Trader Talks webcast page. We'd love to have you over there and part of that conversation as well. So let's see what's going on with the SPX. I mean, we've been talking a lot about this. I mean, this has been in the news, unless you've been, living under a rock. You've probably heard some mention by somebody, whether it's your barber or your postman or somebody talking about the market, right? And what the impacts have been to the market because of XYZ reason, right? And lots of different reasons why the market moves. News being one of them, the recent tariff news, and today being day one of tariff implementation, having an impact on the market. So let's zoom in here on this time frame, really from about February on, because what's been going on in the market is kind of a classic example of what we might look at from a price pattern perspective. I'm going to grab my magic marker here, and we'll just kind of talk through this, right? So we had this rolling over, and we had a push to the downside, a lot of strong momentum candles. RSI, that relative strength index, which is a measure of sentiment, pushing lower as well, down to that reversal point. And then we got this rally back up, right? Counter trend rally to the intermediate term. Yeah, JB says, my barber and postman are clueless as to the market. I know, it doesn't stop them from talking about it, right? In a minute, I'll tell you a story about when I was in the Atlanta airport a few years ago. But taking a look at this downward movement, we get this little bit of a rally here, counter trend to the broader move, the intermediate term downtrend, and then it starts to break down again, gets right back down here to the apex of that push, back in the opposite direction, and then we get again another little bit of a rally, and then a breakdown. And now what we're doing is testing this next level of support, right? So, if we're kind of in this particular price pattern, the question is if this is what we refer to as perhaps a bear flag. Let me grab my annotation tool again because I just killed it. If we're in this kind of bear flag, there's that downward move. There's kind of the sideways flag move. And now we've seen the next leg taking that price down. And if we were to kind of measure this, right, I mean, this has been an accelerating move to the downside. The first leg of the flagpole was a little less steep than this second leg. The second leg of the flagpole moving down quite a bit faster, quite a bit steeper downward movement, as befits the news. And George has a good perspective. Politically, I mean, we got to keep the politics out of the discussion, but I think, from the perspective of saying, hey, there are news events that are roiling the market, yeah, that's kind of where we are, right? So now price is pushed down to this level. The question now becomes where this currently is, where the SPX currently is, are we setting ourselves up for, or is this setting itself up for kind of the next leg of this downward movement, right? Are we looking at this as the potential for another bear flag, which is, if you remember what we just talked about, down, counter trend, down, right? That would be the indication of a bear flag, right? That's the kind of the classical example. Are we in that scenario here? Down, rally up, and downward movement. Are we sitting kind of right here at the potential cusp of the next bear flag movement? Well, there are probably a couple of things that are maybe arguing against that, right? Against that bear flag reality, at least on the S&P 500. Individual stocks, maybe not so much, right? But at least on the S&P 500, what's arguing against that possibility is the fact that we've got an area of support that's kind of establishing itself here underneath this level. I talked a little bit about this in our index options webcast 2 hours ago, right? Talking about the idea that this is maybe an area of support, and some traders may be giving this a fairly wide berth, but traders also looking for evidence of movement one direction or the other, right? So maybe at best what we have going on is some sideways squeeze against that horizontal support, right? This diagonal downtrend line. I know that James Boyd, and I'll let James put this out. I'll ask James if he would put this out into the chat, maybe the link to one of the discussions that he's had recently, because I know he's had several, about the importance of diagonal, I'll say it like James does, diagonal breakouts, right? Diagonal breakouts, where price moves outside a short-term range, right? And that perspective being, it gives evidence of a change. So to George's point, right? I mean, there is kind of this methodology that says, fine, I'll just buy more when it's lower, right? I'll just not do anything. I'll just ride everything out, and I'm not trying to pick a bottom. Well, we're not trying to pick a bottom either, right? I'm not trying to say, I know that this is the bottom, right? Or I know this is the top, right? So the perspective is this, and from a behavioral standpoint, traders, investors tend to be loss averse when price is moving down and risk averse when price is moving up, right? So here's the thing. There's a couple of challenges to that, right? One of the challenges is, well, fine, we can continue to dollar cost average. We can continue to ride this downward trend as long as that downward trend continues to go, right? You buy the stock and you hold on to it, and then sometimes maybe it doesn't come back, right? And we've dollar cost averaged ourselves to a level where, you know, the average cost of our holdings is low, but then they never appreciate, and then we've got a whole bunch of low price stock, right? That's the downside potential to that DCA type of perspective, that dollar cost averaging. So maybe there's a better way to think about this, right? Maybe there's a better way to think about kind of this perspective of being able to make a decision based on price patterns and using price patterns to our advantage, as opposed to just simply saying, fine, I'm just going to close my eyes, I'm going to leave this here, and I'm going to come back 5 years later and hope that it's gone up, right? I'm going to buy a position as if I were, this is the old wisdom, right? That I'm going to buy a stock and close my eyes as if I've gone to sleep for 5 years, and then it should theoretically be higher when I wake up. Well, we know that that's not necessarily the case. So if we can make decisions when we see clear evidence of something happening, then that's not trying to guess at picking a bottom. That's not trying to guess at timing. That's making a decision based on information that we can objectively point to. Now, here's the thing. I don't care if you're dollar cost averaging. I don't care if you're timing the market. I don't care if you're using price patterns. I don't care if you are using some kind of fundamental analysis. I don't care if you are using, quantitative or, on balance volume or VWAP or order flow or whatever it is you're trying to use, right? Whatever it is that you're trying to use. There's no guarantee of the direction in the next tick. There's no guarantee of the direction of price movement no guarantee. I don't care what indicator you're using. I don't care what methodology you're using. And there's a reason for that, because of news flow. News can change a dynamic environment. Yeah, Magic 8 Ball, for sure, George. That's as easily recognizable and identifiable a technical indicator as anything else, right? So what we can do as traders, however, in a circumstance like this, where there's a lot of volatility, right? Where there is a lot of news flow going on, because we've seen it. We've seen it here in the SPX. We see it in the NASDAQ. We see it in the Russell 2000. We take a look at the volatility index here. Let's go to our VIX grid, and we can see that volatility has expanded. So to George's point, and I appreciate George bringing this up, it is about risk management and decision making, right? Risk management and decision making. So if we manage our risk and we make decisions based on available information, then perhaps we can gain an edge. No guarantees of that, but perhaps we can gain an edge over simply just throwing a dart and guessing. And if that's our edge, right? So let's kind of think about this then in terms of, let's go back to our SPX for just a second. I want to kind of just set this up as this kind of perspective on the move that is potentially happening here or might happen. And as we look at this, that is kind of the approach that we might take in this scenario. So let's kind of look for that possibility of price pattern movement, right? Something that we can identify that would give us a decision-making point, right? So if this is the scenario and we've got this downward move and then the move back in this direction. So the possibility is this, that we've got either that diagonal downtrend breakout, or we've got a move in the next leg of the bear flag. So either of those 2 points is kind of within the realm of possibility at this point, right? So one of those points comes here on this diagonal breakout. One of those points comes here on a move down below that level of support. So we might say, if this happens, then this is what we do. If that happens, then this is what we do. So if price breaks the diagonal uptrend line, or excuse me, that diagonal downtrend line, to go back to James's point, diagonal breakout, then we might look at this as a potential reversal. If, on the other hand, price breaks below this support level, then there is that possibility of that continuation into the bear flag, right? So that's kind of the approach that we're going to look at. And we're going to not necessarily use SPX, because SPX is an index, and that gives us some limited potential in terms of just buying the index. We would have to look at using something like a tradable instrument, for instance, where we could buy the instrument, or we would have to use options. So let's look at some opportunities that are, I'm learning how to speak James Boydish. But let's look at some opportunities that might be presenting us with this scenario. Now that we kind of have an idea of what the market is doing as a whole, right? Let's look at some of those possibilities from the standpoint of individual stocks and individually tradable positions, right? So again, these are not recommendations. These are simply illustrative and educational examples of what we might use. So I've built a watch list, and for some of you, you know that this particular webcast has been combined with this trading price patterns, has been combined with a trading webcast that I used to teach called Trading Flag Patterns. And so I created this watch list a while ago when we were doing that particular webcast. But I'm going to come up here to my Market Watch tab, and it is my bear flag vertical watch list. And what this bear flag vertical watch list is doing is it's identifying using a scan, which I've shared before, but we can look at it here really quickly, looking for stocks that have seen downward movement over a period of time, and then have been moving in a counter trend move. So creating exactly that scenario. Downward movement, rally back up, and looking for that possible timing for that next leg to the downside. Now, you notice something's going on here, right? We're starting to see maybe a little bit of movement in individual stocks within the market, right? Because we're starting to see kind of this overall for the stocks that are appearing on this particular watch list, this overall positive movement to the upside, right? Some larger than others, right? DoorDash making a move 7 points to the upside. Lululemon, 3 points to the upside. Ross Stores, 6 points to the upside. Tesla, 17. Zscaler, 7 points to the upside. Now, does that mean that those are moving in an upward direction? Not necessarily, but remember, we've already set up our paradigm. If price gives us a diagonal breakout, then we might look at trading that bullishly. If price gives us a bear flag breakdown, then trading it bearishly, right? By using an option, for instance. So let's kind of take a look at some of these individual stocks that might be presenting that opportunity. Now, one other addition that I've got to this watch list is this column header titled Breakout Column. And so this column header is identifying those stocks that have broken below significant levels of support recently. Either they're doing it today or they've done it recently, and whether or not they're testing that level or continuing. And you can see that as this is changing, the market is starting to move to the upside. I'm wondering if, based on that, there is some news flow going on, right? Kenneth says new news? Possibly, right? Because take a look at what's going on here. We're starting to see some movement to the upside. I just out of curiosity, guys, this is interesting. I'm going to go back to our SPX. And I'm guessing that there's probably some news flow going on. I'm going to bring up my news here really quickly. By the way, you've got news over here on the left-hand side. If you bring up one of those gadgets, so I'm going to add a gadget to this mix, right? So we'll just go plus, and we'll do live news. Boing, right there. And let's see if there is some news flow that we might. Okay, so that might be the news so that's coming across the Benzinga wire. That's got a Truth Social. So potential news. That changes our perspective, doesn't it, right? Okay, now on the other side of that coin, we've seen this movie before, haven't we? We saw this movie on Monday. We saw this movie on Tuesday, where markets moved as a function of quote unquote news and then changed direction. So still, let's take a look at that same watch list. And I want to keep this same watch list here because these are stocks that we know have gone down and are now starting to move back in an opposite direction, right? So I want to take something like, for instance, Lululemon. And the reason I want to take a look at Lululemon is because if this news reverses, if this is not true, then that's going to be one of those positions that may reverse quickly in the opposite direction. So let's take a look at Lululemon. Guys, you're seeing this real time, right? Okay, so we're going to go to the chart here for Lululemon. I'm going to pop back over to my single grid, and we're going to take a look at how this is moving at the moment. I'm going to grab my single grid, and we'll pop in here to Lululemon. Official yoga pants of James Boyd. Just saying. All right. So here's what we've got going on. I'm going to zoom in over here on the right-hand side. And we don't know yet for sure, right? Oh, the rumors about James Boyd and his yoga pants? Maybe so. So here's what we've got going on. We've got that downward movement, right? Here's our down leg to our bear flag. Here's the rally back up. We saw the move lower, and now we're seeing the counter trend move. So I'm going to draw two things here, right? I'm going to draw two things here. I've got that flag move. That's my flagpole, but I'm also going to potentially look for a reasonable diagonal breakout. And there's my support down to this level. So you know what I'm going to do is I'm going to add a little bit of room to the downside. And I don't want to say that I'm necessarily skeptical about news, but news changes and news changes the perspective. So what I'm going to do is I'm going to add some room. I'm going to add about 20%. Actually, I'm going to add even a little bit more than that. Gear icon, price axis. I'm going to add about 30% of room to the downside. Click on apply and OK. All right, so that I can make that projection to the downside. Okay. So here we're getting that breakout of that diagonal downtrend line, right? The diagonal breakdown or breakout. So what I'm going to look for is an if this then that scenario, right? If this then that. My if this then that is going to be this. If we get a break back up above this resistance level right here, then take this trade bullishly. If we get a break below this support level, then take this trade bearishly. Okay. Now, this might be a scenario where we could use kind of this expected sideways range and use something like an iron condor, but we're going to take this more directionally in this particular case, right? Okay. So here's what we've got. I'm going to take the downside move potentially first, okay? And the reason that I'm going to look at this from that downside potential is because implied volatility is relatively high. I'm not going to use necessarily a long put option, because if this news is such that maybe it's decreasing volatility, there is the potential that we could get caught by buying an expensive long put and then having that put become less expensive, which is not what we want to have happen. On the other hand, thinking about that is if this does reverse, then maybe we see another spike of implied volatility. So maybe I'm going to rethink that for just a second. So let's take a look at this downside move first, right? And the expectation is a move below, say, for instance, the 236 mark. I'm just going to make that kind of the bottom edge of our horizontal support range. So 236. I'm going to go to the trade tab, okay? And I'm going to say, look, here on Lululemon, I'm going to go out a little bit of time here. I'm going to look actually for an area where there's maybe not as inflated an implied volatility level. So I'm going to go here maybe to this one that is 37 days to go until expiration. Kevin, circuit breakers are the same to the upside as they are to the downside, I think, in terms of downside. James, check me on that for to be sure, but I think it's 7% either way, right? All right. So what I'm going to do, and again, guys, yeah. Sometimes suddenly these are turned in the opposite direction. I'm still going to go with this idea, right? I'm going to look at buying potentially long put option if this breaks down, but we're going to make this a conditional order. So I'm going to look at what would be an in the money strike if this does make that move to the downside. If it makes that move below the 235 mark, we can go back to that trade tab and we can say, look, I could buy, say, for instance, the 250 strike, which would be an in the money strike at that point, or even the 240 strike. That 250 probably has a little more liquidity in it. And I'm going to look at buying this option, but I'm going to do that with an expectation that not using a buy stop, I don't know what the option is going to be priced at if this happens. So what I'm going to do is I'm going to make that a market order to get into that trade, but I'm going to do it with a conditional right here on this gear icon. And I'm going to say, look, I want to take advantage of this downside move if the price of the stock breaks our support level, okay? If the price of the stock breaks our support level. So now let's see if we can get that conditional order to work for us here in this particular case. It's not letting me put that. Let's see. I am locked up here. Stand by, guys. My platform is not. Let's delete that. There we go. I had to kick back out of that. Let's go back to this one again, and I'm going to put that conditional order in here. And my conditional orders are not working. Okay, well, so let's see if we can get that. Nope. I'm going to try to restart my platform here, guys, really fast and see if I can get that to come back, because I'm not even able to move. Stand by, guys. Let me pop back over here really quickly, and I'm going to give you some resources. I don't think we're going to make any progress here, guys, at the moment, but I'm going to give you some resources here in terms of trading price patterns. So come over to the Trader Talks webcast channel and type into the search box price patterns, and you're going to see a bunch of webcasts that give you some resources on trading price patterns. That's going to be a great way to stay in touch with this. What I'm also going to suggest again is you come over here to schwab.com/coaching and check out our live webcast schedule going forward. Here's what we've got the rest of the day. So after trading price patterns, getting started with Thinkorswim is coming up with Cameron May coming up in just a few minutes. Market and sector analysis with Michael Fairborn, which is going to be a really interesting discussion as we see this volatility. And then, of course, none other than James Boyd talking about trading growth and value stocks. So my hope is that James will be able to get in and talk about some of these characteristics as we get to that point. Guys, I apologize for the technical difficulties that we're running into today. At least at this point, my hope is that we can get that resolved. Thank you for joining me as we put these trades together and put these ideas together. I appreciate your being here. I appreciate James Boyd being here as well. It is an historic day in this discussion. Guys, thanks very much. James is going to be around a little bit later this afternoon. I'm going to be running chat for James and for Michael Fairborn. But guys, we will see you guys back here again coming up. Hopefully we'll get some of those issues resolved in the next little while. Have a great day, everybody. We'll see you soon. Bye-bye.